Hey guys, what's going on? My name is Ryan. I do technical analysis on leveraged ETFs in which I trade, and I'd like to share them with you. Anyways, we're going to be going over two extra ETFs today. We've got Soxel Semiconductors, SPXL, the market, TMF bonds, RUSL, Russia, BRZU, Brazil, UGAZ, natural gas, ERX, energy, GDX, gold, XIV, volatility, LABU, biotech, and UWT, crude oil. So starting off, each of these are on the daily scale, and I do my trading on the 5 minute and 15 minutes. So right now I have each of these charts set up for the daily scale, just to start off with the general trend, and we will be narrowing it down to the 15 minute, the 5 minute, and then the 1 minute just to show the price action. But this is to identify the mega trend that's going on. For example, with SOXL, we can see that the trend has most certainly been up all year. I think it's up over 200% so. So let's get right into it. Actually, first of all, let's identify the super trend that's going on here. We have our consolidation zone, and then we have our breakout. This is our 1, 2, 3. This whole leg up is 3, 4, and I think that we're coming into our fifth wave right now. And I actually sold out of all of my shares of SOXL, and I'll show you guys why. Let's zoom into the 2-hour chart, see if we can identify anything else. So we just came out of a long 3 wave, and I was able to identify a mini Elliott wave in between it. We've got our breakout zone here, and we've got our 1, 2, 3, 4, 5, and we have a retracement A, B, C, all the way down to the bottom of this channel. And we come into our next wave. Let's go into the 30-minute chart and look at this wave. I actually drew a new channel here just to identify the price action. We see a low, a high, a low, a high, a low, a high. So this channel is significant at this point. I also drew this. Anyways, let's get into it. We've got 5 waves. So in our super trend, we are entering what I believe to be our 5th wave. And I also see that we are entering a 5th wave in this new leg here. So we've got a 1, 2, 3 big sell-off, 4, and I think that this is going to be 5 up here. This is further supported by other things that I see going on right here. This Fibonacci right here, this just shows the power of Fibonacci. You can basically draw fib lines at like any point in a chart, and it could be like months later or years later, a price will get up to a certain level and bounce off, and you'll be like, why is that? And you'll realize later that it hit a Fibonacci level. For example, I drew this line. This is my start. See, I drew it up to this 100%, came down to the 61.8, and then it ran all the way up to the 200% right here, and I sold out at the 227. So I just wanted to show you guys the power of Fibonacci levels and how they are relevant in trading. I'm going to delete this now because I think it makes the chart kind of crowded. Let's get further into it, and let's get into the 5 minute because that's where it starts getting relevant. This 5 minute still captures 2 weeks, 2, 3, 4 weeks worth of price action, so it is still relevant to us. But we've got our A, B, C here, and then this is our larger Elliott wave right here. But I have price moving in a Elliott wave inside of an Elliott wave inside of an Elliott wave. So we've got our 1, 2, 3, 4, and 5. So that's 3 Elliott waves that I have drawn: a super trend, a medium-term trend, and a Elliott wave from the last couple weeks of trading action, all of them ending right here. This is also supported because it's at the top of a trend right now. And the last thing that really set it off for me, also the Fibonacci was at 227%, which is a major resistance zone just naturally. Let's go on to the 1 minute and show you guys the final thing that set me off was this head and shoulders that I saw. It was pretty obvious. I saw this left shoulder came down, this head, and this right shoulder. If you want more evidence, I have a divergence on the RSI in basically all indicators. We see our RSI turning down right here, our money flow turning down, and our CCI turning down, and yet we have price moving upwards. So all these facts was the reason that I exited the trade today. So what do I expect price to do? I expect price to come down to this previous channel. and consolidate. And after that, I really don't know what might happen. A larger time frame divergence that I saw here on the 15-minute, or was it on the 5-minute? No, it was on the 15-minute, was this price action. We see that our RSI peaks right here, and it makes a lower one, and this could also be a lower one. And here we have price moving upwards, marked by this blue arrow right here. See what I mean here? We've got our RSI just turning down and price just moving up. These things can't happen together. So for the meantime, I'm bearish on semiconductors. All right, so lastly, let's just do our due diligence and write out the reasons why we are bearish. DW stands for Elliott wave. Medium term coming to fifth. EW, short term coming to fifth. EW, RSI divergence, top of channel, and lastly we have a head and shoulders. So all these together support my short-term thesis that semiconductors might be bearish for the next week or two. And I expect them to drop down to this previous support line and new trend. All right, moving on to the overall market. What do we have here on the daily? So on the daily, we can obviously see a nice looking uptrend. Here are time zones. They mark the lows of sessions. See, we have a low, 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 and our next one is approaching here, it looks like in June. So this is the pattern that I'm currently seeing play out, and I think that we might have a confirmed breakout just because of the 3-day rule, which the 3-day rule basically states that if a price can break out and hold that level for 3 days, it's a confirmed breakout, and I think it's been 3 days at this point. So what I'm seeing here is this ascending triangle, which is usually a bullish pattern. We have it coming up, touching, come up, touch, move up, hit the top of our channel, establish the top of our channel, and we come down, set in our A, B, C, D, E here on our the actual price for SPXL, which is the 3 times leveraged market ETF. We have it coming up, touching, establishes the top of the channel or the top of the pattern, and we come down and we set our A, B, C, D, E, and then we break out. And another thing that supports this is we see that volume decline significantly. This is actually a bullish signal because everybody is waiting for the breakout to occur. So that's on a daily scale. 15 minutes. Again, these 15 minutes, 5 minutes also capture, 2, 3, 4 weeks of price action, so they are relevant in the grand scheme of things. I think I might have drawn a divergence here, so let's go back. And here we go on the 1-hour chart. We see starting here, we have our RSI at its high point, and we move down, set a previous high, and we set a previous high right here, and then we continue to move on down. Now this is a divergence with the actual price action. The price action moves up, so this might be a cause for a little bit of concern right here. However, this is my volume zone indicator and price zone indicator, and it actually tracks the volume. And like I said at the beginning of this video, the volume that declines for the ascending triangle is actually a bullish signal. So this divergence is nothing to be worried about. We see that the RSI, there's no divergence here. These are both pretty much equal. An example of a divergence that would have set me off, they usually occur in the RSI, and for example, one of them would have been like this. And we see price move up here. This is a legitimate divergence. I just wanted to touch on that in case anybody is seeing any divergence in the volume as to the price, is that should be expected in this pattern. So let's go ahead and pop that back in there. So this is a real divergence, and we see that play out with this enormous drop that goes on. On the 5-minute, we've got a bull flag, which is very interesting. We can see that the RSI has been moving down, but it's moving down with price, so this is just kind of confirming the price action right now. And something of note is that it's actually staying above the 50, which is typically a very good sign. Is if you can stay above the 50 or just below it, that's usually a good sign. So as for my predictions as to what to expect for the coming days and weeks, let's go back out to the 2-hour and look at my example chart again. So we have our breakout, and then we're supposed to technically have a pullback of some sorts before we run out higher and break out further. So I'm expecting us to pull back to this further resistance line. Resistance becomes support, and then I think that we will bounce off of that. Another reason that I think that comes back to, let's see what the hour chart is looking like. The RSI should move all the way down to the 50 level here on my hourly chart and freeze it. So for the coming days and weeks, I think that we're going to see a slow grind downwards, and then we're going to have a full-fledged breakout. It'd be nice if we just dropped tomorrow and shot up the next day, kind of like back here on Wednesday. But I have a feeling that we're not going to do that. However, in the market for the coming days, I am kind of bearish on the market for a short term. Long-term perspective to medium-term perspective, I think I've already said it, I am bullish. Short-term, I am bearish. I think that this is what we saw today, and I think that tomorrow we're probably going to dump back down here, maybe move up, and just continue this consolidating zone. All right, so that is the market. Let's go on to bonds. All right, so let's look at bonds on the 1-day chart. We can see that I drew this channel. This is actually a buy channel for me. It's low enough, and we have previous consolidation in this channel range. And so what I did is I bought, I've been accumulating some TMF, which is the 3x leveraged ETF for bonds, in this price channel, and I finally think that we are breaking out of it. However, I zoomed out to the daily chart originally is just to identify this long-term overhead resistance level that we are starting to approach and how it affects my chart. So we're on the 1 hour right now. You see that we came all the way down from $30 to $16, and we set in an A, B, C, and then we started to move out higher. We see here, and I'm getting more and more into harmonics, but this was a pretty nice harmonic we have set up. So in theory, this bottom line should be 0.618. And I have 0.62 right here, so that's pretty solid, and this is supposed to be 1.618. I guess I was just too lazy to, there we go, perfect. So 0.618, so this is the ultimate destination. Another destination is a 1.27, but I didn't draw that because I thought it clogged up the chart a little bit. However, it was pretty interesting the last couple days because we actually broke out, and we have a nice cup and handle going on here. A longer term cup and handle than what I have drawn on the chart, so let's go ahead and do that. I just saw this right now. Let's go back to the pointer tool, move down here, we have this rounded bottom, we come all the way back up, and then we consolidate, and then we break out. And let's go into the 15-minute to show what I'm talking about. Let's go into the 5-minute. This was the cup and handle that I had identified. While we were in our flag mode, I saw an A, B, C, and then I saw this rounded bottom again, and we actually spent some time. We came back and consolidated here, and then we moved up higher. And right now, I think that TMF is in full-fledged breakout zone. This was my buy point I put here over the weekend. Unfortunately, it didn't get filled, but I'm okay with that because I've been holding shares for, about 2 or 3 months now. And I think that this ultimate, let's go to the 1 hour. I have an exit point of this ultimate, D here, and also at this resistance line. I'm going to sell half at this resistance line, this overhead long-term downtrend resistance line, and then if breaks below this lower line, I'm going to sell the other half. Otherwise, I'm just going to play with the house money and let it run and go up to its ultimate destination. But I set this line right here as a major resistance point to prove that this cup and handle was a true cup and handle, because we see that we have several resistance zones here. We've got one resistance zone, 2, 3, and then we see that we came up to this level and we stopped and we flagged out for probably about an hour, and then we shot up today. We're up 1.39% today. This is a good sign. Something to be wary of, though, is this ascending wedge that we've got going on. This is typically a bearish signal. What I expect for the short term, when I say short term, I mean tomorrow to the end of this week maybe, is that with this ascending wedge, I think that we also might see a pullback, and then we're either going to pull all the way back down to here, which is kind of a bearish signal, or we're going to pull back down to here. This previous resistance becomes support. We're going to pull back down to this line and move up higher, like I had shown previously. I did mark a divergence that I saw with this blue line right here, corresponding to the money flow, which means that people are taking profits or shorting it. We see our money flow moving down, and we see this moving upwards. And that is my analysis for TMF, 3 times leveraged bonds. Let's move on to Russia and see what we see in our USL. All right, so Russia, what do I like about this chart? I like how clean this chart is. I think it's a very smooth, obvious symmetrical triangle we've got going on here, marked by clean time zones. So we've got a low here, a low maybe, and a low over here, a high, a low, and this next timeline right here corresponds closely with what might be the apex of this symmetrical triangle. So again, what do we look for in a symmetrical triangle? We look for a touch down here, and then we set our resistance line. We come down and confirm our support line, and we set our A, B, C, D, E. We break out, we retest, and then we move up higher. So what do we have here? We have an uptrend leading into it, which is good. We touch our support line, move up, hit our resistance line, and we set in, I actually moved this ABCD forward because it seems like an extended zone, or an extended symmetrical triangle. For example, you've got A, B, C, D, E, and then, we've still got 3 more things going on here. So I moved it forward 1, which, isn't the end of the world. It's just the pattern that's significant. So we've got our A, B, C, D, E, and, we might have even made a new wave today with 1 right here and 1 down here. Anyways, let's move on to the 1-hour chart, see if we can identify any near-term patterns. This is for like the last 3 or 4 months. All right, so what do I have with these lines going on down here? Corresponding to the 1-hour chart. So I guess what I was trying to show here maybe is this is our commodity channel index, trend and entry, CCI, which is used to establish overbought and oversold levels, as well as used as a retracement confirmation indicator, and it's also used to show the strength of a trend. So what I drew these blue lines here for is to use as a retracement confirmation indicator. We can see this here, and I'll try and explain it, I guess. What I'm seeing in the chart is I think I'm seeing more bearish volume come in than bullish volume, and this is reason for concern right now. So this is our 100 line and our negative 100 line. This is negative 175, positive 175, and plus 150, or 250, negative 250. So usually it stays in between the 100 to negative 100, and we see that playing out right here. And however, we see that our green line has not made it above the 100 bullish volume coming into the price. And we see that our bearish volume is reaching levels below negative 100. We see that we came up, we made a weak bullish move down, and we see our bearish volume come back down and set another wave below negative 100. And this is reason for concern if you're bullish on the chart, that it might actually break down instead of going up higher. However, just the pattern in itself kind of outweighs this indicator for me on a single time frame. But it is something to note. I would have a stop loss set below these 2, the C and E wave, probably around $40. But let's move into our 15-minute, see if we found anything of interest today. So on our 5-minute time scale, looks like I've identified a channel here I cloned it, so we've got two parallel channel lines right here. Moving on up, other than that, I don't have anything for the 5-minute scale. And for the 1 minute, I guess I see a cup and handle playing out right here. This is probably the last 2 or 3 or 4 days of price action. So I see that we made a bottom right here, and we moved up, we came down, flat fry pan bottom, and we came back up, and now we're kind of flagging out, and we're waiting to break above this prior resistance zone. It's a resistance zone because we came up here, it was rejected, came up here, it was rejected, came up here, it was rejected, but now we're kind of flagging out here in this cup and handle pattern right now. So we see at the end of the day, we kind of made a move upwards. So for the short term, going back to the 5-minute, I could see us moving up in a sort of pattern like this. So short term, I am bullish. Medium term and longer term has yet to play out, and I guess we will see soon enough. All right, let's move on to Brazil, BRZU. All right, what am I seeing on BRZU? I guess we've got this pretty well-defined channel right here. We've got a couple overhead resistances that were rejected here. We've got 1 false breakout, 2, 3, and then for support here, we've got resistance, resistance, support, support, and support on this massive dump back here. However, this massive dump, isn't necessarily the worst thing in the world. For example, we can see this exact same thing happen about 8 months ago. We just absolute all-out dump right here, and then we consolidated within this little zone, and then we shot way back up to the highs again. So we see this massive dump right here, and in my opinion, this zone from anywhere from $29.50 to $24 might be a good accumulation zone. We also see a huge pickup in volume right here, which is interesting. Anyways, let's go on to a shorter time frame, see what I have drawn out down here. This is all from the last trading session, so I'm not exactly sure what I've written down. Oh yeah, I remember this now. So I saw this mini cup and handle right here, and I actually had a nice trade. I had accumulated some shares all the way from 28 down to 27, and I saw this cup and handle and I drew it, and then we flagged out right here, and then we shot up higher, and I ended up exiting. I was afraid that I sold out too early, but I'm not so sure anymore. However, the next day I realized that there was a larger cup and handle in play right here. So we've got a rejection and a rejection right here. So we've got this rounded bottom going on, and then we have some consolidation. So the typical cup and handle will look a little bit like something like that. So there is this period of consolidation here on the right-hand side, followed by lower to lighter volume. Do we have lower volume in the last couple of trading sessions? I guess you could maybe make the case that we have lower volume, although I guess I wouldn't go so far to say that. It's not obvious to me. Let's see, what else do I have drawn here? I guess I see a descending triangle. I had predicted that the price would bounce off these channels, which they haven't necessarily done. So potentially we can delete some of these. So we've got those deleted. So what do I have drawn here? Okay, so that's what the ABCD pattern is. So I guess we do have that playing out. So we've got an A, B, and we're still waiting for C to set in. I don't think C set ever. And I actually am more keen to just delete this and play out with our cup and handle theory. So what to look for in the coming days? I think that, we might reach this apex here, pull back, and then move forward. Or we might, drop down here and then break out. Or we might drop down here and break down to this previous low. This is a pretty solid support zone now that we've formed over the last couple of weeks. For the last several trading sessions is right around here at the $27 mark. So that's my analysis for Brazil. Let's move on to natural gas. So what do we see here in natural gas? I've got quite a bit going on, I guess. And one thing that I'm very bullish on natural gas. I've got quite a bit of shares up here at a pretty good entry point. However, I am kind of hurting there today with this minus 13% move that we had. It was a huge dump. However, I just thought it was interesting because UNG shows something very significant to me, and my theory, if true, could be a pretty massive profit. So I think that natural gas kind of moves in a cycle, and as people need more air conditioning and whatnot. Anyways, I'll just show what I see here. So let's just, I think it's a it's a reciprocal of itself. It's mirroring the price action from last year. So we see that this is 2016 and this is 2017. So back in March, April, May, June, we had this huge consolidating zone. So we have this big dump. So down, up, down, up. Same thing happened at the same time this year. Down, up, down, up. And then on the way down, we go down, up, down, up, down, down, up, down, up, down. And we form this kind of half circle pattern over here, and we've got this half circle pattern playing out here. And anyways, you can see that the next thing that happened is we shot all the way up. This is probably a 20% price move here, and I have the underlying theory over the next month and a half that UNG and UGAS are both going to rocket back up. So this trading day today didn't make me very confident in that, but that's the long-term prediction. You can even see here on this bottom side that we have a down, up, down, up, down. And over here, it looks like we have a down, up, down, up, down. So this might be the final dump before we move up, but I'm not sure. It looks like over here, we tested with this wick right here, the previous low. And over here, I think that we could drop and test this previous low. It looks like on UNG we've got another 10 cents to fall. But actually, let's go ahead and mark that out. So that could be the ultimate entry point, as this was the ultimate entry point over here. All right, so let's go back to UGAS and show what the ETF, the 3 times ETF is showing. So again, over here, we can still see that playing out. We've got this half circle, and we've got this half circle over here, but my analysis lies basically in the last 3 or 4 months. So what do the chart guys have? Chart guys, great website. Subscribe to them on StockTwits. I think they're fantastic. I just kind of have their sentiment of the last trading session here in my analysis, just to kind of give me some confirmation of what's going on here. So this is too clogged up. Let's move into a 15-minute time frame. And we can see here that we've got this nice, well-defined channel going on here. We've got a top, and a bottom, bottom, bottom. Okay, so we've got our Elliott wave. We've got 1, 2, 3, 4, 5, ABC. And then I think that this might be our larger ABC corrective move. So we see that we ran all the way back to the top. It was rejected at the top. And then I think, let's move on to the 15-minute just to get a better view. I think that we could be coming to the exhaustive point in this trend. We've moved down up from 23 bucks all the way down to 16.50 at this point. It's a massive dump in price. So we've got our low here, A, high, B, and our low of C potentially. Let's go ahead and delete this. This was my previous prediction, which was a 1, 2, 3, 4, 5, and I thought we were going to continue to move up higher because we bounced off the bottom of this channel here. However, that was wrong, obviously, with the 13% drop we have today. So let's go ahead and delete that. And what do I have here? Do I have a 1, 2, 3, 4, 5 bearish Elliott wave? Yes, we've got 1, 2, 3, 4, and a 5 wave here. But what I'm really interested in is this ABCD pattern. This is another harmonic, and the price level should be 0.618. This is 0.619, and the ultimate one is 1.618. So we are very close to having this be a perfect harmonic, and I would be very interested to see if this plays out, and moves up, and we actually are bullish, and this is true. I just started using harmonics, so don't take my word on that specifically, but it's just what I'm seeing in the price action. On the 30-minute time zone, I drew a Fibonacci level just to identify any support zones, and we do have one, thankfully. We have I moved it from this low point down here to the high point right here. And we see our 78.6, 61.8, 50, 38, and 23.6. Now this is kind of the last, the last hope of a support for you guys, or else we're going to fall all the way back down to the 14 price zone. So what I think is going to happen, and the reason I drew this vertical channel right here, is because if we see our time zones, we have a low, a low, a low, and a false low, but it's still significant, I guess. And the next low is way over here. However, since this one isn't significant, it leaves me wondering if this time zone is going to be significant. However, what has been true in each of these time zones is the center of it. So we see in the center here we have a high, in the center here we have a high, and in the center here we also have a high. So we're approaching the center of this zone over here. We're probably going to reach it in the next day or two. And so what I think is going to happen is I think that we're going to chop around down here for the next 2 or 3 days. And once we hit the central zone, this is going to be our low and not our high. And then we're going to shoot back up here. Let's go into our shorter time frame and just see what I have here. I have this RSI divergence. It's moving all the way up. It moved from 8 to 58 over here, while price moved all the way down. This is a natural divergence, and theory says that this shouldn't happen. Last but not least, I've got this head and shoulders going on right here. So like I said, I think we're going to chop around, and this will give price time to come back down, set in this right shoulder. And then we might potentially test this breakout zone right over here. So that's my short-term analysis on natural gas, and we'll see how it plays out. Next up, let's take a look at volatility. This is one of those stocks that I think that you should just sit on for several months, because it is programmed to always rise, just like UVXY is programmed to always fall. So ZIV, I like to do my analysis on. I've been holding about 40, 50 shares. I just started selling some because we're reaching the previous high, but this is the daily chart. It shows the price action for basically the last year and a half. And like I said, you can see that we are reaching almost a 400% move down here from the low of 20. Right now we're at 80 exact. So let's move into a shorter time frame. We've got this massive dump, which was obviously huge for volatility. Volatility just fell like a rock. However, it was supported by the lower support line of this channel that I've drawn in here, which has been doing a pretty good job of identifying support and resistance zones. For example, you can see here with these small arrows, 1, 2, 3, 4, 5, and then our most recent one on Wednesday. We did fall from 82 down to 67, and I was scooping up as many shares as possible when it started touching this 50% retracement zone, and as well as when it touched our bottom channel. So let's go into our 30-minute. And still pretty crowded. Let's go into our 15-minute, 5-minute. Here, this is when stuff starts to make sense. So we can see we got our 1, 2, 3, 4, 5. Got a long period of consolidation that's taking place now, right in between 76 and 80. I think that we're just starting to break out. I saw that we had a B, C, D, E ascending triangle. It broke to the downside, came down and was supported by the 38.2% fib line. I had drawn this from the low here to the high here and dragged it outwards. And the next day it was pretty supportive. It showed this wick down here marking the low. I think I also have a larger time frame Fibonacci right here. Where is it? Yeah, so a longer time frame Fibonacci. I like to use these to identify some goals for taking profits. So I drew it from right here up to this swing high right here, and you can see again this is our 78.6. It dropped all the way down to 78.6, but our extension lines are 127, 141, and 168. So for the 141, I drew this black line right here, and for the 161, I drew it right here. So I'm probably going to take half my profits here at 141 and half here at 161. Anyways, let's get back into the 1-minute chart and let's look at what's going on here. Oh yeah, this ABCDE ascending triangle, I had a feeling that it was going to break down because we had this divergence in RSI starting from right here, and it just continued to fall and fall and fall right there, while price, outlined by this blue line, continued to rise and rise. The RSI divergence was taking place right here. Anyways, we did fall. It wasn't a huge drop at all, and we continued to move upwards after that, and we see that we have this price, this previous resistance line right here, also act as resistance today. We see that price fell, came up, consolidated for a while, bumped up against this resistance zone, actually fell back down, and then it moved up and broke out of that zone. And so my prediction for tomorrow and the coming days is that we are going to see a drop downwards. We're going to drop down and retest this previous resistance. Resistance becomes support, and then we're going to move up, and I'm going to take half my profits here, and I think that we might come into a larger ascending triangle as we reach this apex, and then I think that we might move up and reach our target of 161.8. So that is our volatility 3 times ETF. You can see in the last week alone, we've moved from 76 all the way up to 80 now. It's a great stock, constantly maturing in value. All right, let's move on to crude oil. And let's go ahead and start off with DWT. What can we see? First thing we want to do is identify a trend. So what's the trend here? You can see that it's in an obvious upwards channel. It's got momentum towards the upside. I've got the inverse of crude oil. This is the bearish crude oil because I'm bearish on it, just because I think that my UWT chart is a little bit complicated. If you don't understand my original sentiment for being bearish on oil, hopefully this will make things a little bit clearer on a less messy chart, because my charts are getting a little bit messy. So we can see that we had this rounded bottom. We've got this cup and handle playing out right now. We have a 1, 2, 3, 4, 5 move, and I think that we just set in our A, B, C corrective move now as we reach this apex, and I think that we're going to break out and move up much higher. Again, I think we're going to move higher because of this upwards channel that we have taking place here. Let's move on to the UWT just to see the inverse of it. So again, this downwards channel, this is the inverse of the chart I just showed you. We've got high, low, high, low, high, and now we're starting to move lower again. And one thing you'll notice about this chart is there's not a lot of consolidation in between here. There's not a lot of chop and whatnot. It's always just kind of a straight shot all the way up to the previous channel resistance or support zone, all the way down to the support zone, all the way up to the resistance zone. And right now we are in the middle of moving down to what will be probably our, support line down here at the bottom of the channel. All right, so what do we have going on here? A smaller time frame. Like I said, it's a little bit more complicated of a chart, harder to follow. Let's go to the 1 minute. Let's go back to the 3 minute. So we can see that we have our resistance line right here. We broke out. We set in 1, 2, 3, 4, 5 all the way up. We have a divergence here, which is why it's a 5 out of 5 trade setup. We have our RSI moving downwards again, while price moves upwards. This theoretically should not happen, and then we see it break below 50, this 50 RSI level convincingly, and we see it take an all-out dump. And what do we have here? We've got an ABC retracement, and what I think might be happening is these black lines here identify important resistance level marked by Fibonacci. I've just deleted the Fibonacci because it clogged up the chart even more, but we've got our 50, 127, 141, and 161 all overlapping right here. So I think that our ultimate destination in the very short term, when I say that I think tomorrow or Thursday, I think we're going to move up to C right here, and this is going to be our actual ABC retracement, and then we're going to move on downwards. I had marked this out here with these lines. Previous video I made, I said ABC, and I still hold that belief. However, I think that it's going to be a full 5-wave move all the way down instead of an ABC retracement. So let's go back to the 1 minute. What do we have going on here? We've got a 1, 2, 3, 4, 5. We dump, we set in an ABC, and we've been moving upwards ever since, which, my current position and theory says it should be going downwards, but I'm not terribly concerned right now because if anything, this kind of looks like a bear flag to me on a higher time frame. So like I said, short-term prediction is ABC, and then we're going to rock it on down. It's an important breakthrough level right here because I've got a 61.8 and a 78.6 on different time frames overlapping here on this this black line I have drawn right here, and it looks like we did break that today. However, we weren't able to break it convincingly, and we just set in an ABC. and moved on upwards. So tomorrow I think that we're going to reach RC, might be a decent scalp, and then longer term I think that we are going to see us fall down here at the very least, and you know, we might potentially go back up, come down, up, down, test this channel again. Chart guys, sentiment is bearish. I have this marked out here, and that's my analysis for UWT, DWT. Second to last, let's go into LEBU. Biotech sector just saw an all-out dump today. It was kind of unfortunate to see. So on the daily time frame, these 3 times leveraged ETFs kind of make the price hard to follow just because the price movements move so dang much. But what did I want to show here on the higher time frame? I wanted to show that symmetrical triangles have the tendency to bust and double bust, and the volume didn't downtrend. So this ABCDE symmetrical triangle I have drawn here might not be true, and it might be a bearish symmetrical triangle, unfortunately. So what do I see here on the 2-hour chart? I see a head and shoulders, a huge one, multi-month head and shoulders. You got left shoulder, head, right shoulder, and I think that we might be breaking down right now. On the Fibonacci line drawn from this left shoulder all the way up to the head, we can see that we are being supported by this 50% Fibonacci level. Next support range is going to be this 28.2. I have this mini chart of what's going on here, drawn right here. So from our head, we can see that we dump and we are in a definite downtrend, which is the bearish case for the symmetrical triangle. We'd like to see it come up, retest, set this resistance level, set the support level. We have A, B, C, D, E, and then we come and retest and we move lower. We didn't exactly move lower today. We just shot all the way down. So from this, what can we see? We see that we move down, come in, retest. We have A, B, C, D, E, false breakout, which is why I said that symmetrical tendencies have the tendency to bust. So this would be a busted bullish breakout. And so we have false breakout and an absolute dump all the way down. So my prediction was that with this, once we started moving down, I thought that we were going to come and be supported by this long-term support line. However, we were not, and we just fell all the way through it. So I guess that we can delete this prediction. We can delete this. Actually, this prediction was the bear case. I thought that we were going to fall down, still make a corrective move up, like my example chart shows down here, and then fall all the way down to the bottom of the channel. We didn't do that, so I'm going to go ahead and delete these lines again. And let's move on to a smaller time frame just to show what's going on. I drew this parallel channel all the way down, and we just started to perhaps break out of it after what was like a $5 dump from 49 down to 43, $6 dump. Anyways, what I saw one divergence here today on it. I see RSI moving up, up, and up, while price moved down, down, and down. Now, divergences don't take root right away. It's just a longer-term thesis that you have. Here on the 1 minute, that longer-term thesis might be, you know, several hours, but it gives you a good sense of when you should get in a trade once, you know, the divergence starts to take root. So as soon as we saw this break out of this well-established, you know, channel coming down, I'd be on alert, see that we fell back through it, think nothing of it, and then see that we rose much higher, get interested and wait for a pullback and try to time an entry here. So predictions for tomorrow, looks like we broke this support line right here. I'm not going to draw it. I bet we're going to come back and retest this channel right here. And hopefully we don't fall into it, because that would just be a bearish case. However, I think that, you know, we are getting exhausted in this long move down. We barely consolidated it all along the way, and I can see us, you know, bouncing off this channel and moving up higher, and slowly, you know, maybe trying to grind our way back up. All right, that's my analysis for biotech. Let's move on to gold, what everybody's interested in. So here on the daily chart, let's just form our thesis for a long term. This goes all the way back to 2012, and we can see that we have this horseshoe kind of pattern going on right here. I think this is interesting. I've kept these lines here, and I'm happy I did. let's go ahead and show why this is significant. So we see bounce, comes up, bounce, 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 and then we come all the way back up there. We do have this long-term overhead resistance line, which was rejected over here back mid-2016. We've been trying to recover ever since. All right, so that's just on a longer-term time frame. You can see from this horseshoe pattern what I'm kind of expecting to happen. So we move all the way up here, and we fall back down and bounce again. And I kind of think that we're going to, move up and, probably, try and touch this horseshoe again at some later point in time. All right, so let's go to the 2-hour chart. So we can see that we set in our Elliott wave 1, 2, 3, 4, 5, and we came back down and we set in what I'm predicting to be a symmetrical triangle that's bullish, unlike the other symmetrical triangle that I found here today, where price had gone downwards leading into the trend. This price moves upwards leading into the trend. So we've got a move right here at touch, and we set in our resistance line. This has already been a well-defined resistance line. We move back down, set in our A, which is our support line, B, C, D, E, breakout, retouch, and then move higher. So from the chart, we've got an A, B, C, D, E, and we just started moving upwards here. Let's zoom into the 15-minute time frame. Actually, let's go back real quick and just note that the, all right, let's go all the way to the day. So on May 30th, TradingView had 15 bulls and 8 bears, and on May 26th, the chart guy's sentiment was bull momentum. We'll probably make a lower high, pull back, and then might break out. So taking that into account, let's see what we've got going on here. So we've got our DE, and then I saw a 1, 2, 3, 4, 5 Elliott wave, and then I think that we saw this head and shoulders take place here, and we obviously broke through that resistance. It wasn't defended. From this 5th wave, we have our A, B, C, which are our lowest point. It comes down and is supported by this 50% Fibonacci level. Let's go on to the 1-minute chart. And we can see this lovely divergence for a bear on gold. We have RSI moving downwards here while price moves upwards, and we can see it take effect, and it just dumped all the way down. Next resistance zones, or next support lines, I should say, are going to be 61.8%, which we're basically touching right now, and then all the way down to 50. Given the current price action, my theory is that we're going to bounce here at the 61.8, might move a little bit higher, but not much. And then I think that we're going to fall down here and retouch this 50%. And then we might even bounce again and move up down to this 38.2%. And that is my thesis on gold for the short term. Again, medium to long term, I do have the case for a bullish move approaching. Anyways, this has been my analysis on 3 times leveraged ETFs, and I wish you the best of luck in trading for the next coming day. If you like my videos, you want to see tomorrow's update, please like or subscribe. All right, have a good day. Bye-bye.